Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everyone. I was worried that the thing wasn't going to come up. Here, let's turn on the music here. Okay, so we've got a non-farms. You know, every time that we have a non-farms payroll, it's like it's a huge thing. And yeah, we do have a Federal Reserve meeting, and the market seems a little bit uncertain about whether we'll really have a pause or if we'll have more rate hikes. So you'd think that this number should be important, but I am, you know, it's kind of funny because I was kind of feeling like, does this number even matter anymore? That's what I thought last time. And when I read the zero hedge, you know, preview of all of this, they were basically saying the same thing. So does it matter? I don't know, but probably the markets are going to move a lot on this number. And of course, we've got inflation numbers next week and then the Federal Reserve meeting. So let's go to the charts, just take a quick look at what we got going on. Yesterday in the treasuries, we did get a pretty strong move up, but immediately after that move, it kind of died out. I got stuck trying to buy the highs, took a $30 loss, never really went anywhere after that. And now here this morning, we're a little bit lower. So I still have the sim position on. I guess we can gamble with non-farms. Here's the thing, like the Goldman prediction is that it's going to be a little bit under expectations, but they have beat the consensus expectation like 9 times in a row now. So it's probably going to be higher than expected. I don't know. What do you think? Back to the chart. S&P 500 also doing okay. I mean, they really took off yesterday after some of that economic news because, you know, the economic news kind of suggests that inflation is coming off, especially on kind of like more the manufacturing side. Oil also coming back a little bit. Gold and silver doing okay here. Copper on the upside. So one of the big stories is that there's been like a real collapse in the Chinese real estate market, and the Chinese are coming in with like what they've been doing hasn't been enough, and so it looks like they may be coming in with another rescue package. So that's why you're kind of seeing the metals up across the board. Coming over here to Bitcoin having a little bit of a bounce after a few days of downside, retracing the weekend action, and the dollar towards the bottom of the range that they've had recently, at least 103.41. So that's where we're at. Do you trade? Comment ES futures? Well, so I do not take trades in ES very often anymore, to be honest with you, but everything that we talk about is going to be relevant to you guys trading ES. So cities, as I said, 200. Really? Yeah, well, this position that I have on over here is kind of stupid, to be honest, but do I just take, I guess I should just take it off, huh? I will just take it off ahead of the news. Because this is still, I am still trying to test out like a discretionary strategy, and in this situation, if I don't have stuff baked in, I don't think that I really want to be going long here. So I will flat that. I kind of feel bad about it though. Kind of want to keep it on. They better not jump up. Then it'd be like, ooh. Yeah. Well, that one's a sim. That one's a sim trade, right? So on what I'm doing right now is like on main ZN, I'll do sim trades and trade like multiple contracts. to try and, build out a position and like do position trading. So that's what I'm practicing over here. And I place my actual trades in the micro 10-year. Trade super, super small. Wish your ladders were longer during these key volatile days. Well, let's see. It hasn't been too much of a problem. Especially since we have the ES consolidated a little bit. You use a tick consolidation to just show points instead of each tick. But we'll see. All right, so we are coming up on the news here in about a minute. Something I will note is that things like average earnings month over month are going to be important for us in the treasuries, and a lot of time we kind of forget that. Okay, so let's not forget about that average earnings number. Now, since you mentioned ES, I think how ES responds to this news could be really interesting. So we continue to be in a market where it's like the ES kind of does its own thing, Like we could end up getting a really bad number in ES saying, oh, it doesn't matter, we went to buy all the techs, and There we go. It's down, so I'm glad I got out of that. Whew. I'm not hearing the number yet over the squawk, though. Okay. Unemployment is 3.5. 200 and... Wait. Did I hear that right? No. No, that can't be right. I'm seeing U.S. non-farm payrolls 339 versus an expected 195. Let me see here. Let me verify that. U.S. May not. What the fuck? U.S. May non-farm payrolls 339,000 versus an expected 190. You have got to be kidding me. There is no way. That is so insane. Oh man. Well, I don't know about this one, guys. Okay, so I tried to bring in the spread in there, but the robot hit me like immediately. More bullshit. I don't believe this number. I just straight up don't. This is nuts, right? Well, I may regret doing what I just did there. I really didn't expect them to hit me right away. Oh, whatever. I mean, this is going to be a volatile market, but so far we're doing okay, so. The price that we got at wasn't actually too terrible, so. How can that number be real? I mean, like... This is the 15th consecutive report that has beaten economist consensus. I cannot understand how that number can be real. I don't know if I would say the numbers are contradictory, Amiguya. So remember that the numbers that were bad, like earlier, like yesterday, were largely about manufacturing. Manufacturing has been struggling for a long time, but our economy is mostly services, and services have not been the same. Okay, and employment is a lagging indicator, so I wouldn't say that they are contradictory, but how can the consensus expectation be so wrong? And then when you actually start digging into the employment numbers, you continue to see all sorts of aberrations that don't really make much sense. So I really have a lot of questions about these numbers that we continue to get in employment. I mean, this has been going on for months and months and months. It's just like I don't. How can these numbers be real? Okay, so what I'm seeing or hearing is that the traders are still betting that the Federal Reserve will hold in June. How can you hold rates when you're beating the consensus expectations by 100K? I mean, that's going to be pretty zany if they like completely retrace this move and end up moving higher on this session. Even if you disregard all the layoff news in the services sector, filling jobs is nearly impossible. I don't know, man. It really doesn't seem to make sense, does it? Oh, that's experience talking, not politics. Well, you sure, but I mean, but what you're saying is that it's no, you're saying filling jobs is nearly impossible. Is that to say that when you put out a job posting, it's really hard to get people to apply that are qualified and actually hire somebody? We're struggling just to show up for interviews is a struggle. Well, I don't know, because the thing with that is that it has been a tight labor market, and so what you're going to see in that situation is that people are going to try and trade up for better jobs. So a business like yours, you know, cleaning houses, not many people want to do that. Fortunately, right? People probably feel like that they have opportunities to get into bigger careers, and so they're probably pursuing those. I don't know. Even when we're talking about like the kind of jobs that like illegal immigrants would take and stuff, like that dynamic is probably still there. Which, or another way of saying this is that the labor market is still tight. The strong job gains would kind of, you know, indicates more towards a tight labor market, and in a tight labor market, the jobs at the low end are going to have a harder time finding people to fill the positions. But that wouldn't be able to tell us very much about what's happening in the rest of the labor market that would say that you shouldn't be getting a lot of new jobs, you know? Well, it is true the kind of people that were working for you are not necessarily like oh yeah, I don't need to work here because there's this larger career that I can go to. They probably don't have a whole lot of options like that, but there's still options for like other jobs and stuff. But I'm only hypothesizing on that side. The larger point here is that I don't know how much we can really understand about the larger labor market just from your particular business, because you're at one extreme, right? Big offers just showed up there at 15.5. And then kind of, did they scare him away or did he convert? Well, they didn't trade up into it. Okay, they cleared it without any significant volume, so. I own a friend that owns a print shop, 3 hands that own roofing companies and HVACs, and 2 others who own and general contracts. But then that's still like indicates a tight labor market, right? You have a hard time hiring people. That indicates a tight labor market, right? So a tight labor market does not, I want to say does not necessarily, but I think the correct thing is a tight labor market will probably still have a lot of jobs being created, right? So the labor market being tight, I don't think says anything about the veracity of this number. I'm using the right words. Why am I struggling for words? But where are those jobs? The probably at the top end. That probably in the services sector, they're hiring a lot of people. And there's probably a lot of people still switching jobs, although the numbers that we got earlier kind of suggest that the people that are switching jobs are not making as much as they were, which is good, but we'd also another thing I think is that we should also think about state by state effects, right, Uzi? Because Florida has done pretty well through this whole thing, but there are some more Democrat states that lost a lot of jobs and are still kind of recovering, right? So that could be another factor. In fact, let's go over to Zero Hedge here, because they usually have that in their kind of synopsis. They should probably have that up by now. Wow. With consensus expecting a modest payroll drop from 291K to 195K, the Whisper number coming in a little higher at 225. In Goldman's desk, a print sub 100K hits the tape by 100 basis points, and a print north of 375 hits the tape by 25 to 50 basis points. Okay. So their prediction was that a high number would hurt the S&P 500, and so far the S&P 500 is not that changed, but we're still moving and trading. So anyways, not only was this a 4 sigma beat to expectations, but it was the 12th beat of expectations in the last 13 months. And yet, While the establishment survey was a blowout beat and the strongest print since January, the household survey unexpectedly tumbled the most since April 22nd as it plunged by 310k jobs. So pushing the divergence between the two series back to near record wides. And here is that divergence that you can see, the divergence between these two surveys. The household survey came down, and that's a big divergence. That could be some of the mean reversion, resulting in a 0.2% jump in the unemployment rate, which rose to 3.4% to 3.7%. Usually they'll show you a little chart of the which states had the most, right? But I don't see that yet, so they're still writing, I guess. Is it really that they're just trying to make Biden look good? I mean, it's one of those things. I really hate this because I am an empirical person, okay, and I'm not going to make a claim like that. You know, we have a small following. We're public. We need to be responsible with what we're saying. That's alleging a conspiracy theory and wrongdoing on the part of the BLS. I'm not going to make an accusation like that unless I had direct evidence that that's what was happening. Okay, but that's why it always comes back to what would be different. What would be different if the BLS was fudging numbers to try and make Joe Biden look good? What would be different about the numbers, right? Yeah. You can't prove it, but everything fits. Yeah. It's crazy to me, this whole thing. Okay, so it looks like I finally got... They got me out there. Okay, so in this situation, the thing that I'm going to be scared about is that volatility contracts very quickly. And so, could we get lower lows today in the treasuries? That's certainly within the cards, but there's going to be a tendency to bounce before we get that, at least on this first revisit. And that's not like some pattern or anything like that. That's just volatility, right? You're going to have more volume traded right after the news. And all of this liquidity up in here has been cleared. And so that makes it a little bit more difficult to push to new lows. It can happen, but it's going to take real volume to make it happen. So for me, it's probably better to sit on the sidelines a bit. Although I could get in at 645 and that would be okay. I could maybe even try and get in at 364 again, and I don't know. There was a good little bounce, and it's already settling back in there. And the selling in ZN in particular seems to be pretty persistent, and in ZB too. And the spreads are all flattening as well. Now, the one thing that I'm not seeing is the S&P 500 fall. A number that good would, based on the analyst expectations, be bad for the S&P 500. But so far, there was an initial downside, but they've kind of come back. They're a little bit higher, and the S&P 500 seems to be okay with it so far. Okay, Forex Live. Confusion in the bond curve today, with some yields near the highs and some at the lows of the day. Well, so do you see how much the 5-year ZF has bounced up there? I don't know. How is the federal, I thought that maybe, well, okay, so there's still CPI. But I feel like that this news release just makes the next FOMC meeting less certain, right? Makes it less certain. I would think that that would result in higher yields, but so far it's limited. What is this? Elon Musk, consenting adults should do whatever makes them happy, provided it does not harm others, but a child is not capable of consent, which is why we have laws protecting minors. Oh, that's interesting. Okay, so, this is not too important to what's going on in the markets right now, but it is a relatively major political story and a major development in the whole Twitter saga, so I'll talk about it briefly. Yesterday, there was an agreement made with the Daily Wire and Twitter to put out the documentary What is a Woman, that was made by Matt Walsh and was very controversial, right? And so they wanted to have it on Twitter because it was like getting taken off of other services. And when they put it out, the Twitter Trust and Safety team said that it was hateful content and banned it. And so then Elon Musk came in and said that they had made a mistake, but that because of its controversial content and everything, it's not going to get like pushed out to other people. It's not going to be shown alongside ads and some of those other things, which seems a little bit reasonable, but it's still going to put a bad taste in the mouth of conservatives because it's like they're not, they're throttling the content, right? Well, now Elon Musk is tweeting about and promoting the documentary himself. So there's like, oh, the algorithm isn't going to push it, but Elon Musk will. That's kind of an interesting twist on how this has played out, isn't it? I thought it was a decent documentary. It wasn't incredibly mean-spirited and heated. Oh, it was. It makes the gender activists look bad, right? I mean, there's no way around it. It makes a lot of people look really dumb, and they do dead name people, which is kind of the key. Controversial thing, right? Well, yeah, but that's not hard. but the misgendering / dead naming people, Twitter has changed their rules so that is allowed, but a lot of people believe that should not be allowed and that is like violence. So the entire thing has been much. Yeah. You know what? So my children, well, my son in particular has gotten involved with this, what I believe to be a fad. Okay. But all of his friends are of the non-binary persuasion. And he's bringing a number of girls in the past year. There's been at least 3. Okay. There's been at least 3 different girls, okay, and we're talking about a 15-year-old kid, okay? 15-year-old kid, and I'm pretty confident that they have been doing sexual acts on each other, right? There's not a whole lot I can do to, like, actively stop it, right? And so I want to come in and be like, well, okay, if you're gonna, like, sleep with girls, which is a very unwise thing to be doing at your age, and there's all sorts of negative consequences that could come from that, then you're just like grounded. You just can't talk to anybody. You can't do anything. Well, like that's going to make him like depressed and want to kill himself. Right. So it is this like emotional blackmail. You can't do anything about it. I tell you another thing, and it's something that really bothers me about this. And I'm just going to mention it to you guys because I know we're a tight-knit community, and this is something that I have not seen talked about that I think is a significant factor in all of this, and that is the names. So, like, I open the door, parent is there to pick up their kid, and they use a name for the kid that I've never heard before, right? Oh, okay. What's going on there? Does the parent actually know or not? There's no way for me to know. Is it my job to expose them or not? I don't know. I haven't done anything. But then, like, here's the thing is, like, if it did come down to a situation where I felt like the parent needed to know something, there is no way for me to find out who the parent is, because the kid is using a name that doesn't exist, right? Like, if I'm going to go out and try and find them on social media, the name that I have is not the name that I'm going to be able to find anything about them from, right? So I think this presents a significant child safety challenge, because, you know, my kid has at times been suicidal, and these are kids that have problems, and that problems that their parents should be alerted to, and there's no way for me to alert the parents. Yeah. And while competing with this, and that's the thing is, like, you know, in his mind, it's like, you know, I'm getting pussy or whatever, so he probably thinks that he's doing pretty great, right? But I'm looking at this and I'm like, this is, like, not good, dude. Like, okay, first of all, being sexually active that young is associated with a number of risk factors. Okay, you know, like, it's not just like you might get pregnant. Okay, because I think that's what the kids think. Oh, well, but I'm using protection, so it's okay, right? Now, it's not just that you get pregnant. They're more likely to get involved in drug abuse. They're more likely to go to jail. They're more, like, all of these things, right? It's just not associated with. And, you know, this kind of comes back to the technical analysis discussion. I don't like going in and making decisions based off of things when, like, you know, it's just like there's some stat that exists. Well, how do you know that it's like a statistically significant stat? Okay. But there are some stats that are, like, just, you know, so widespread, and we might not completely understand why they are, but it kind of says to me that you should live your life in a certain way, right? The other thing, though, is that you're, you know, you're putting yourself at risk, right? Like, any of these girls could come in and accuse him of something, and how is he going to defend himself, right? And if you're doing that enough, it's going to, and in fact, it already has been a problem where people, I mean, given the context, I think that anybody that knows him and knows the situation would immediately know that it's like ridiculous. But he has had, like, bullying and stuff, like, where people will say things and it's like he has no defense because, you know, they were messing around alone, and yet he continues to do it, right? It's like, there's no solution, you know. The period of 15 to 20 years is the best period, but the consequences will be evident at the age of 20 to 30. Yeah. Yeah. And like, the only, so one of the things that I come back to, something that I believe that is not widespread among the public, but because of my own neurochemistry and so forth, you know, I've come to understand these things better than I think the larger public has. And that is that your brain can be rewarded for behaviors, even though everything directly associated with that behavior at the time seems negative, right? So this is like how depression can happen, right? Is you sit and you ruminate about negative things, and you feel bad about your life and whatever, and you cry about it, and the crying actually releases dopamine, which reinforces the behavior and kind of rewards it, right? So even though everything surrounding the situation is negative, and like, why would you want to feel that way? Well, of course you don't want to feel that way, but the brain still gets a reward from it, right? So when I come into a situation like this, coming in and and being like the hardcore disciplinarian in this situation is not likely to be very effective, right? Coming in and being the hardcore disciplinarian could actually reinforce the behaviors, right? So I have to kind of like be a little bit like, you know, any kind of actions that I take have to be subtle, essentially, right? Yeah. They want the dopamine rush. And especially if they feel like they're sneaking around and doing something that they're not supposed to. That's going to give them that dopamine rush for sure, isn't it? So it's a big problem. This is where I find this again. I think everybody feels that like being more inclusive to everybody is a generally good thing. Diversity, I mean, should diversity be a goal? I don't know. I think in some contexts, diversity can be very effective. Okay. I don't know if it's necessarily something that we should be pushing in our policy, but whatever. Okay. But inclusion and all of those sorts of things. Okay. So people will generally be attracted to that because those are things that make us feel like that we are being, that we have the moral high ground, as I put it, right? But the problem is that when you actually go through and you look at the actual consequences of these things, they are not positive, right? You're creating a situation that leads to more negative outcomes for children. And we shouldn't be pushing or exposing children to this. And you just look at the challenge that I'm having as a parent. This shouldn't be a problem, right? I don't feel like anyone is entitled to my time, respect, or admiration. I'm not quite sure follow how that's related to. So let me back up, okay? I believe that part of our responsibility as people is to improve society, to try and make society better than we left it, and to try and make the next generation more successful than we were, and so on and so forth, right? And so we think that by acting in a moral way that we will accomplish those things. And the problem is that a bunch of people have attached themselves to ideas and policies that they think are moral and would be making the world a better place. But when you look at the actual outcomes, it does not make things better. And the key fallacy that I think leads to this sort of a thing, well, let's say two key fallacies is number one, that entitlement ruins people. Okay, so you can't come in and give people things that aren't earned. It does not lead to a better world. It doesn't, because it doesn't change their behaviors and their patterns. Right, the success has to be earned, and if it's not earned, it ultimately leads to negative things, and we see this over and over and over again in policy. And I don't know why people don't get it, but you know. And the second one that I think is that we are doing people a favor by playing into their delusions. Is also doesn't help them. Like, some people might have challenges that other people don't, okay? But I don't think that, so like, if you have autism, let's get away from the gender debate. If you have autism, okay, so a lot of people think, oh, okay, well, they have autism, so we should be easy on them, and that's not the correct way to do it. And in many respects, the people that have autism and ADHD, you should be harder on them. You should hold them more accountable to things, because they need that extra support to create behaviors and patterns that will make them successful, right? And so people think that what they're doing is empathetic, but in reality it's not. It's enabling destructive behavior, right? It's just like if I had a trader come up to me and they go on tilt a lot or something like that, and we come in and we say, well, you have this condition or whatever that makes you go tilt, so what we need to do is we need to give you extra money so that you can be able to manage that drawdown better, and in the long run you'll make the money back and you go higher. That's not going to help that trader, is it? Right? It's just not, because they didn't overcome the problem that's holding them back from the success, right? Pathological empathy. I don't know. So like here's where it maybe does become relevant to us, I guess. We are kind of, so part of this is maybe relevant to trading because of personal development and stuff, right? But there is a political side of it. So here's the thing that happened yesterday that interests me. I have a hard time because when I'm talking about the politics, the primary what is the word? Goal. I'm having a hard time because when I talk about politics, the primary goal here is to help us understand what's going on in the world so that when it becomes relevant to us in trading, we can act on it. And there can be situations where we as traders can take advantage of political situations to make money. Okay. But I also have my own biases, and so I have to be really cognizant to not allow those biases to prevent us from trying to understand what's going on in the politics or from being able to make correct predictions, right? I don't want to become an influencer that's like in the Republican primary pushing one candidate over the other. But the challenge right now is that all of the stories are about Donald Trump is running his campaign not the way that he would expect. Or that we would expect. And yesterday it has gotten to the point where it is affecting me. Like my opinion of Donald Trump is changing, because it used to be like, okay, when this all happened, I went along with it because I was like, well, he's gonna win. The media is blowing things up. It's not as bad as the media is making this out to be, and he's going to win. So, we'll go along with the party and we'll have to see what happens. And there were some good things and there were some bad things about his administration. And I think that towards the end of his administration, he kind of lost the plot a little bit, went crazy over that January 6th thing. And then it was kind of like, well, okay, let's just try and move on. Okay, so then he comes back. He's running again in 2024, which I honestly didn't think he was going to do, right? Well, this campaign that he's running is different. And the thing is that I think one of the things that gave Donald Trump so much lasting power was that the fundamental part of his message was, I'm fighting for you. I'm going to be loyal to you. That's why the loyalty thing is always a big deal for Donald Trump, because he's saying, I'm going to be loyal to you. He expects the people that worked for him to be loyal to him. And in return, he's being loyal to the American public to do the things that will be best for the American people, right? But what is he doing now? Well, like he goes after Kellyanne Conway when really she's just doing what she's supposed to do as like a journalist and a pundit. Like, she read off poll numbers, and Donald Trump didn't like the poll numbers that she read off. So he just goes full bore against her. Is kind of like, okay. So the challenge that Donald Trump is going to face in a general election is trying to prove to people that he really wants what's best for America, and that this is not just about him trying to fulfill his own ego. And so far, the way that he's behaving in this primary kind of suggests that it's more about his own ego. Okay, but the Kellyanne Conway thing, or not Conway, it was Kayleigh McKinney. I don't always know how to say her name. I don't watch cable, so I don't see how people actually pronounce these things. I'm just reading them online, right? Okay, and that he's done a lot of things like that before. Okay, right? But the other thing that happened yesterday that is like, okay, now you're losing me, was that Donald Trump said, I don't like the word woke. Half of the people that use it can't even say what it means. Which to me is like a ridiculous statement. Okay, like we've talked about this before, but I would say that wokeness is an obsession with virtue signaling and identity politics at the expense of logic, reason, meritocracy, and constitutional rights. That's wokeness. Okay, and really, when we're talking about wokeness as a movement, you're talking about a network of people and ideas, right? But you can very easily identify things that are a part of that network. It's very clear and obvious here in our society. And to say that it's like, it's not a thing, or that you don't like the word or whatever, is just like so totally far from like where the Republican base is right now. But it's not just that. It's not Trump. Because Trump used to use the word woke all the time. He used to rail against these woke elites and stuff like that all the time. And now all of a sudden he's saying, oh, I don't like the word. The only reason that you're saying that is because DeSantis's strength has been anti-wokeness. And so now you're defining your campaign by opposing certain things about Ron DeSantis. Because I am very anti-woke. I am very anti-woke. I don't think, I believe that these things are harmful to people in society. Right? So for Donald Trump to kind of dismiss it, you're losing me. You're losing me because, number one, I don't agree with you on the issue. I think that it's an important issue, number one. And number two, because it's like a change that suggests to me that now you're just saying shit to try and get elected again, which is not the Donald Trump we knew. So I don't want to be like taking sides. I want to remain like a unattached observer so that I can give the best information about what's going on in the primaries and how it might be relevant to our business. But now all of a sudden I'm finding myself that I am not that it seems like Donald Trump is like crashing and burning to me. Until people understand where they came from and why they came to this world and where they'll go after this. I mean, that's a very religious take on it, right? I would come back more to like the things that we know about people, which is like people need to feel purpose in their life and things like that. And when your purpose in life is becomes things that are like actively harmful to the society, like that's a problem, right? That's what happened in China during the Cultural Revolution. It wasn't a good thing for the people. I think that as people, our first responsibility is to be effective, right? Yeah. They talk about like systems of oppression and things like that. I don't like to call it systems of oppression. There are systems of power, right? The people that have the power in those systems have the power because they were at some point effective, and those people in power tend to remain in power unless alternative system that is sufficiently more effective to displace them, right? It is our responsibility to be as effective as possible so that we don't get people in power that will take away our rights, is what it really comes down to. We have an obligation to be successful in the world, or at least try. And to build the economy and to build up people around us. That's how we maintain our freedom. If we rest on our laurels, then these Marxist crazies will try and take over everything and ruin all of the rights that we have. That's what I think. That's the mode that I'm operating from, right? And for me, the thing that's going to help people the most is creating economic freedom, opportunity, investment opportunity, right? And so by creating a community here and being one of those people that understands the financial system really well and understands the value of things, that's where I can contribute the most. I thought it was going to be politics, and then I realized that you don't get shit done in politics, right? I don't even know what got me started on that whole long stream of thoughts and rants, but oh, it was because of the documentary. Yeah, okay. Apparently, Jordan Peterson is up early and tweeting a storm too. Oh man, so it's something else that's going on in the economy that is not getting a lot of attention. Okay, in Canada, there is a bill that looks like it's likely to go through, and they're also trying to do this in California, where companies like Facebook will be required to create a fund and agreements that pays news outlets for the content that gets linked on their platform. So basically, oh hey Walter, how's it going? Oh, you're going to a job interview? Well, good luck. Good luck. Anyways, so it's like if you link a news story on Facebook, then Facebook has to pay that company for giving them the link. And the which just seems like so bizarre, right? I mean, isn't Facebook providing them a service by giving them site traffic? But I guess not, because some people don't actually visit the news stories or something. I don't know. And I think part of it is just to like punish Facebook. Honestly, it's like to punish Facebook and to try and help out struggling traditional news media, you know. But Facebook's response is basically like, oh, okay, so we're just not going to allow people to post links on Facebook then. How did non-farms payroll go? So the number that we got defies all explanation. It was not only was it another beat, like the 14th beat in a row, but it was a 4 sigma beat to the expectations. We got almost 100,000 more jobs than the consensus expectation. So yeah. So we're back to, are they cooking the numbers? It's really starting to feel like they're cooking the numbers, doesn't it? I can't prove it, but if they were trying to cook the numbers, what would be different? What would be different? They can't help it. I don't know, man. Yeah, it's especially when you get into like that the revisions are so big and so forth. Like, it's just a joke at this point. You know, this number still matters because the Federal Reserve is going to make decisions based off of this, right? But I just don't trust this number anymore. I just don't. I don't think that the non-farms jobs report is an effective indication of where the economy is currently and where it's headed. I think it's like a lagging indicator that has a lot of error in it. And so how did it go for me? Well, so I foolishly put a bid out there to try and bring the spread in, and they like almost immediately hit me. I had to sit through quite a bit of a drawdown, but eventually they came back up and hit my fill at 3.65. And I got out. So I made $10. I consider myself grateful and lucky that I got away with it. Eventually, the monster will grow too large to hide under the king-size bed sheet. Well, what are you gonna do? Maybe you're right, Uzi. Like, what are people gonna do when we get into September and like we're in like an active recession? The stock market's freaking out because that's like looking at things right now. That kind of looks like where we're headed, right? So if we're at that point and then the jobs numbers still look good, then it's gonna get really weird. But at the moment, that kind of seems like that's what's gonna happen. It's just so let's come back and see if we get some more more detailed articles going into this. Trump says officials are lying about the Jew death toll in Ukraine. Okay, so like here's another problem with Donald Trump is that I mean this is a problem with the Republican Party in general, but I really think that the position that the Republican Party is taking on Ukraine is very out of line with the American public, and that issue alone could kill Republicans' chances at taking the presidency. But it's probably too early to talk about that one. Dum 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 bum bum. Okay, let's look here. Drilling down, we find the unemployment rate for both the youngest and the oldest soared in May. One possible reason for the massive divergence, the birth-death model added 231K jobs in March. These are not actual jobs, but merely an assumption by the BLS as to how many new businesses were created and hired workers based on statistical assumptions. Again, these are not actual jobs. The less volatile and manipulated participation rate came in as expected at 62.6, unchanged from last month. And another paradox, despite the blowout payrolls number, in May, both full-time and part-time workers dropped by 220K and 23K respectively. Turning to wages, the sequential print of Spot 3 came in line with expectations and a drop from last month's downward revised Spot 4, while the year-over-year print of Spot 3 was just below the 4.4 expected increase and down 4.4% from last month. There's a breakdown by industry. Information wages, the big outlier, up a whopping 1.64% month over month. More details from the BLS. The number of persons employed part-time for economic reasons at 3.7 million changed little in May. These individuals who would have preferred full-time employment were working full-time, part-time because their hours had been reduced or they were unable to find full-time jobs. I'm gonna skip some of this, to be honest. There's way so much. Of all of the above, one was especially laughable. The 25K new construction jobs was the biggest increase since January. and is perfectly logical because clearly one goes on a construction working hiring spree when mortgage rates are 7%. In September is September your expected date in time around what? Yeah, based on the current economic trajectory, the financial tightening that we're seeing right now will probably become apparent in the traditional bear market seasonality period of around October, September. So a lot of the economic numbers that we're getting and like modeling out of the economy suggests that we'll be in recession by September. I don't want that to present that as like I am making a prediction that there will be a recession. But that does appear to be the most likely case. Okay. Commenting on the numbers, TD Securities strategist Priya Misra focused on the establishment survey and said that very strong payroll report and upward revisions the last few weeks, and that is bear flattening the curve. The Fed is likely to hike in June, and that is our base case. We think there should be some chance of a July hike as well. And while the market appears to lean in that direction, it's not convinced yet, as swap traders slightly boosted the probability of the Fed hiking rates at its policy meeting this month to around a 40% chance. They also bumped up to around 88% chance, the chance of a quarter point increase for the July meeting. Gregory Farinello, head of rates trading strategy for AmeriVet Securities, also chimed in. There is something in this report for everyone. The increased layoffs are beginning to flow through. We don't believe this number changes the dynamic for a skip at this month's Fed meeting when looking at the fine details. Right? So what this means for the June meeting is like just more uncertain. And while others were so drawn into the minutia of the report to think it matters, it does not, with futures virtually unchanged since before the print. Like Academy's Peter Cheer, who writes to Cheer, I don't know how you say that name, Tchir. Help me out, Indian buds. Who writes that I do think we should see yield curve 2s versus 10s continue to invert more and approach negative 85 or more. Academy Security, the more pragmatic analysts are starting to echo zero hedge in realizing it is all one big joke courtesy of the Biden Jobs Department. Vital Knowledge Media job site. Is it plus 339K or negative 310K? Why do we even pay attention to this report? Question mark. Yeah. Finally, instead of looking at the ridiculous payrolls report, one should now pay attention to the unemployment print. Leanne Leingren at BMO explains why. Anytime the unemployment rate is 0.3% off of the low hit over the prior 12 months, which just happened, it tends to go on to spike 1.5 to 3 percentage points higher. Look at this recovery here in the treasuries. They're pushing up. Sure, I'm lucky that I made $10 and got out of there, right? You know what? While I've been ranting, I think I missed a large amount of volume somewhere back down here towards the bottom. Because the cumulative delta in the rates is coming back pretty hard. Germany is already in recession? Really? Well, there are parts of the euro. The euro economy is very different to the US economy right now, isn't it? Oh, that's funny. Bitfinex is retweeting this guy Consensus Sys. They say Ethereum isn't reliant on a small group of developers, a client or infrastructure service or an app. It is reliant on the ongoing efforts of the infinite many. And Bitfinex says it's not a security because it's not the efforts of others. It's the efforts of many. Completely different things. Yeah. It's I feel like that it is a security, to be honest. Or rather, I think that it should be treated as a security. Yeah, has the government made it officially? This is funny. I don't know, like looking back on that whole controversy over whether we were in a recession in 2021, for historical purposes, I don't think that it would really make sense to say that we were in a recession in 2021, would we? So I would say the people that were saying, well, you know, there's the time periods that we actually assess it and they vote on it and all of these things. I think that those guys were ultimately kind of correct. I don't think that what happened in 2021 should be referred to as a recession. Seems to me like the recession is still coming. Right? Because like the big one would be that when you have a recession, you reduce rates, right? So like from the interest rate cycle perspective, we didn't have a full cycle. Well, here's the S&P 500 opening up. And so far, it looks like they are game on in the equities. I mean, that is buying, right? Coming back here, making sure I didn't miss anything on Twitter. Oh, and after that little jump up, the treasuries fell back down there, but it was on very low volume. Was there a move in the... No. The dollar went a little bit lower there, though. The dollar, I mean, look at the dollar through all of this. This is pretty nuts, right? Here's Nick Timmeros. The May jobs report showed labor demand has remained strong, but wage pressures have eased from a year ago and a big jump in U3. A difficult one for the Fed, with many officials saying this report would be very important because it has a choose your narrative element to it. I don't know. Doesn't the choose your narrative element make the report less important though? What I think what this really does is it puts a lot more focus on the inflation numbers next week, right? So if I just come in here, let me adjust my calendar here. Oh, we don't get it next week. It's the week after that. Oh, man. So CPI is on June 13th. And then PPI is on June 14th, which is the same day as the FOMC statement. That's going to be a little wild. And what are the estimates for it? Oh, they don't have estimates yet. I know. How about we go over and see what Reddit is saying? I don't know. All these people are saying that Reddit is going the way that Reddit is turning off external API access. Like you'll have to pay for the API, and that's basically going to kill all third-party apps. So all these people are saying that Reddit is going to die. I mean, they could be right. I don't think that there's really a viable alternative, so I don't think that they'll actually be displaced. And some of the things that the people are saying will displace Reddit look dumb to me. Like people were talking about, oh, there's this, the people will go to this network, but it's not a Reddit. It's a Twitter. It's a not as good Twitter. Hey NASDAQ, how's it going? I'm gonna have to go to the sub directly r/economics. I have not been hitting the weights as hard as I should be, but I am still, and not a week has gone by that I didn't do it something. So, and I've been spending a lot of time doing like yard work and things like that, pushing really hard in the period when the temperatures are still somewhat mild. So I got 2 more things that I'll be doing tomorrow, and then I think that I can relax and I'll go back to my regular weightlifting schedule. And I also got myself a punching bag, so I think that I will do the punching bag and jump roping more as my cardio, because I do think I have a little bit more visceral fat than I should. Yeah, punch him in the face. There's the problem with the boxing thing is that I don't really know what I'm doing, right? Boxing is not really the best sport to pick up at 38. Am I 38 now? Yeah, because my birthday was on Wednesday, and it is 2023, which means I'm 38. I don't think that boxing is the best sport to pick up when you're 38. You need your brain cells. Punching a punching bag, maybe that's okay, but I'm not going to be doing any actual boxing. Right? See here, this person says, I think it's a foregone conclusion now that we'll be seeing another rate hike at the June FOMC meeting, but that's not what people are saying. While the treasuries are turning back down again, I wouldn't say that it's a significant change in cumulative delta driving it, but it could be because the S&P 500 is buying pretty hard. Look at that iceberg at 42.68. That is like a level break setup in the ES if I've ever seen one. Let's just note that happened at 42.68. 68. Happy birthday. Thank you. Oh, we didn't do anything. I bought my birthday present months ago. For my birthday, I was given the gift of bass. So I got myself a nice big subwoofer for my studio. That was my birthday present. But it kind of makes it anticlimactic, doesn't it? Yeah. I'm not liking the way that the treasuries are trading here, man. I think I am gonna turn my account off. I took one trade, but I don't know if I want to touch this anymore. It might change. But at the moment, the way that it's moving is a little bit... Well, there's some absorption there at 13. They're still sitting there at 42.68 in ES. Wish you get whatever you set your head to. Yeah. Well, we've got lots to go. Lots of things to do. Yesterday, I purchased the study materials for the Series 3. Because wanna start looking at that before I go on vacation. I want to see CTA. Yeah, so one of the things I'm unsure about, but I'm sure that I'm going to learn more about as I study here, is like there's the Series 3 lets you do things related to futures, but I think that to do managed futures, which is what we ultimately want to do, we also need to get a Series 31. So I think there's still a bit more work. But when I was just looking over the overview of the Series 3, it looked like a bunch of stuff I already knew. One of the things that was funny is that there was a chapter on technical analysis in the Series 3. Pointing out common patterns like head and shoulders and stuff like that. That's what was in their technical analysis chapter. This is one of those things that I think is fun. So, I mean, they stress this in the courses, okay? But like having a certification or like a license does not make somebody an expert. Just remember that, right? Hi from San Diego. Oh, thanks. I forgot that you were from Chile, but you've been here before, Sebastian. Well, I said 42.68. I'm not gonna like declare victory on the level break setup in ES until it maybe gets to 78, but it looks like they're gonna keep going. Do you like skiing more than... Well, I do snowboarding. I've never done surfing before. I would like to go snowboarding next year, or this coming season, but I don't know if I'll actually do it or not. It's a lot of money, you know. Like I still need to spend probably like $1,000 on gear and $1,000 on the pass. And I want to put a lot more money into my IRA, so maybe I won't do it. So I asked my brother about it the other day, and he seemed unsure. So that maybe makes me think that maybe it's not going to happen. Is the IRA and SP? What do you mean by SP? It's in the money in the IRA goes into an index fund. Yeah. I might put some of it into Berkshire Hathaway, but hey, looks like the treasuries are gonna push down a little bit more again. Any thoughts why we are flying? Well, I think that the S&P, like I was kind of saying before all of this, so somebody was asking about the ES. These days, the ES is doing its own thing. And so, you know, that report that we got would kind of suggest higher interest rates. I would expect the S&P 500 to sell off of it, and they're not. So it kind of it seems to me like the S&P 500 is ignoring it and is just going on this, you know, buy tech spree. So it essentially flows that are not really related to the fundamental state of the economy, right? They do seem to be having a little bit of trouble extending here after they had that initial big time absorption of about 50,000 contracts in the 4268, 4269 area. The treasuries are pushing down again. I don't know if the flows are strong enough if we go to new lows, but the treasuries are probably free to be able to do it now if they want to go that direction. Maybe they're just eating stops. Like they're a little bit below 68 and they didn't get to 7, they didn't get to 80. The S&P 500 doesn't seem to like the treasuries turning down a little lower there. Looks like the Japanese yen went and the dollar is surging back up. So It's kind of hard for me to really take a strong position here, but it does look like they could go for lows. I'm looking for more information about that jobs number, but doesn't seem like anybody really knows or understands what's going on. Oh, wow. CTO of OpenAI's Twitter account falls victim to a SIM swap attack and starts promoting a scam coin. Someone put a lot of work into this. Guys, please do not rely on phone authentication to secure your accounts. I'm sure we probably all have situations like that, but if you're like logging into something and then they say, oh, we'll just send you a text message and you can get in, then you need to change your security settings, because it's a SIM swap attack is not that difficult, apparently. Israel made that not difficult. No, I don't know if it can spy on any phone, but yeah, the way that SIM cards are created, they're easy to spoof, apparently. So they just need to know what your phone number is, and they can masquerade as you, and then have the authentication messages, with the code that gets sent to your phone, and then it'll get sent to their phone, and then they're in. So if you're going to do two-factor authentication, you need to be using like an auth app on your phone, where you go into an application and it generates a code. There was one day where I went through and I checked a bunch of my accounts, but I'm sure that there's other things. One of the things that I really hate is significant security for trivial applications. It's like I sign up for a website simply so that I can go in and get a download or read something. And it's not like providing me some sort of service or anything like that. So like, why would I want to create a really strong password and like two-factor authentication and all of this sort of thing for that? I do appreciate that many websites are allowing you to authenticate through Google and similar services, though. That's good. Well, they're back to 3.65, which is where I got out of my original trade. So it looks like I probably... Well, we got a lot further than that, right? Weren't we at like 3.62 at one point? So I wasn't expecting that one. Can it keep going? I mean, it looks like there's a decent amount of selling. There's an iceberg there at 09. I don't know what's causing it, but like I was really sick for a while, and ever since then, it's just kind of like a gravelly throat. Like I still get junk in my throat. And it makes my voice crack. I hate it. I don't know, guys. Do you think that the S&P 500 is going to flip around and sell on this? Yeah, an authenticator app would be fine, Raymond. So like Google has an authenticator app where you would go in and scan a little code, and then it has a 6-digit code that updates every minute. That would be a sufficient 2-factor authentication for most situations. There are levels that go further than that where you have to, where it's like a hardware key that you hold that's even more secure, but that's pretty rare these days. But just don't do 2-factor authentication where the second factor is a text message. Okay. And you should do 2-factor authentication too. You know, like especially for like your Google account. Maybe your Discord account counts. Oh, that's interesting. I was just going into Discord and looking at something in Discord, and apparently Discord integrates with OBS. So it shows on Discord that I'm live streaming on YouTube, and you can click the link if you click on my profile. That's cool. Some use email. Well, an email is probably okay, but what you really want is one where there's an authenticator app. Now, some sites will have their own, like for your Blizzard account, they have their own authenticator application, which is kind of annoying that you have to have all these different applications on your phone. But the nice thing about those ones is that it will send you a push. So you don't have to type in the number. You just have to pull your phone up and click, yes, that's me. Do you eat liver? No, that's not a typical thing that you see people in the United States eat. Oh man, I mean, when you look at the chart, it sure looks like that they could go for a new low. We're getting into that tail area, so they could totally go. And they're just like right on the edge. I'm gonna recenter it again. I'm maybe considering doing something with the sim, but the S&P 500 is really falling apart here, man. Only burger. Okay. I think it probably must be allergies. Like when I go outside, I can smell all of the flowers and stuff. Like you don't even have to be close to them. Like just everything is blooming like crazy right now. Oh, this is a good question over here on Reddit. Do institutional traders constantly keep an eye out for their algos, or do they just press a button and algos do all the trading? How does modern day institution trading look like to institutions? Okay, so an institutional trader will have a depth of market that has algorithms executing a lot of things for them. So one of the things that those algorithms will do is save them the spot in line. So there will be orders at like almost every price to save you a spot in line to get you at the front of the queue. And then when it gets to the inside bidder offer, if you have things set to you don't necessarily want to be taking on any inventory, then those orders will cancel. So that's why, by the way, when you get like a spurt of volume, let's call it, in the treasuries, you know, where like it moves up like 3 or 4 prices all at once in an unexpected situation, that will change the market a lot, because those guys didn't necessarily want those fills. They were just saving their spot in line and then they got filled. It's like, oh, whoops. They also have a way to set a refreshing order. You know, like you'll have an order out, you can like click on it and change it to be a refreshing order and set how much to show and stuff like that, right? Okay. So then they will have these algorithms that are market making in the middle, and you can kind of give it parameters about how much inventory and what direction you're trying to go and things like that, and the algorithm will do a lot of stuff. So it is algorithm assisted trading, right? Like you could just sit there and let the algorithm do everything, but then you as the human also have control over what it's doing to accommodate, you know, client orders that you're trying to fill and things like that. Okay, interest rates higher odd when we have deflation. I don't know if I would say that today's numbers were deflationary though. The hourly earnings is in line with expectations at spot 3, which is just like normal number. That's what spot 3 is, middle of the line, what you want. We got a really high headline non-farms number, which is inflationary, right? And then you get this contradicting household survey that says the exact opposite. So what are we supposed to make of that? I don't know if we can make anything from it. But the big thing here is that, like, if the number had come out more in line with the consensus expectation or below the consensus expectation, then that really would have given the Federal Reserve a lot more room to say, yeah, let's pause. Right now, the probabilities are still suggesting that the Federal Reserve pauses, but I would think I'm not so sure about that. So let's talk about what the difference between the surveys are, right? Okay, so one survey is they basically ask all of the payroll companies, how many people are you paying? Or how many people have you added this month, essentially, right? The household survey is they actually call households and ask them about their employment status, right? So these are diverging right now. Now, there are like seasonal adjustments and things like that. And so what we're seeing right now suggests one of two things. Either A, the adjustments and so forth are so significant that it's causing these two numbers to diverge. In which case we kind of have to dive deeper into the numbers to see what it's doing to understand what the actual state of the economy is. Or B, they're cooking the numbers, which, I mean, the revisions end up being so big that maybe that is happening. Can't prove it. But listen, if they were cooking the numbers, what would be different? Nothing would be different. Okay. So is one of those surveys more important than the other? I don't know. I kind of feel like at this point that this number doesn't matter. I don't think that, we've given a lot of attention to the unemployment number since COVID, right? And especially during this period of like after peak inflation, let's call it, when inflation started to come back down, right? Like we've been watching the jobs market very, very, very carefully because of the concern that you could get wage inflation, price inflation spiral sort of a thing, right? That doesn't appear to be happening. And so, yeah, I don't think that the jobs numbers are as important as they were 6 months ago. And now getting these numbers that are so confusing and seemingly contradictory just makes me think that that makes it even less important. So, not saying that you're on the wrong track per se, Ferrari, but I'm not sure if it really matters. I think that there's like, especially for the flows that we're seeing right now, they might not be related to non-farms, to be honest. I'm not sure that that strong buying in the S&P 500 on the open, for instance, had anything to do with the non-farms. I don't think it did. That said, I'm still kind of surprised that the market is saying that they're not going to raise in June. So it's kind of weird. The treasuries are right there on the edge, but it's not going yet. So something that you'll notice in the treasuries, by the way, is that often when the treasuries sell, instead of it being like this strong sweep of liquidity and so on and so forth, it ends up being more of a buyer strike. So like it will end up pushing through those new lows on not a lot of volume, and it ends up being like really anticlimactic. That can make it a little difficult as order flow traders to follow, because you just see it ticking up and down on like 700 contracts and you're like, well, there's not actually flow coming in and pushing it, and so you don't want to get involved. But then it keeps going and going because correlation with the Japanese yen and all these sorts of things, right? Thanks. Hard landing talks flew out the window. Yeah, well, but the thing with that though, Ferrari, was that this is the time period when they were all talking about, are we going to have a hard landing, soft landing? They were all talking about this time period. So like that particular market question prediction, I think, has been answered, and it was that we got a soft landing, right? But then the thing is, like, then we get the soft landing and it's like, oh no, actually we are still going to have a recession. It's just it's been delayed 6 months, It is kind of funny because when I look at all of the economic data that was released earlier this week and everything, I've felt very strongly at many points here that, yeah, it kind of looks like we're going to go into a recession the second half of this year. But I know that that's like an incredibly difficult prediction to make, so I don't think that I'm willing to stick my neck out and say that's my call, is a recession in the second half of the year. It does seem like the most likely scenario though, right? So like, we're just in a really bizarre spot, aren't we, right? And then the other thing is that we're getting into the summer trading. So like the market tends to be quieter during the summer. And then in the time period when we're supposed to be having a recession, that is a time period where markets typically tend to struggle. October and September are historically the worst months. So when I game it all out, I kind of does look to me like we're going to have a recession, but I can't really say that confidently based on the data per se, because while there's a lot of data that really does strongly suggest that we're going to have a recession, there's a lot of other data, in particular this employment data, that says no. And then there's the whole thing about, well, employment is lagged. If we're making our decisions on unemployment, we won't see it in employment until it's too late. And so we actually do end up pushing ourselves into a recession because we react too late to it. That like now is the period where we should be pausing and kind of making things a little bit easier and backing off. And because we continue to go hardcore, we create a recession. But then there's the split side of that, which is like maybe the economy actually really is doing well and the unemployment data is correct. And so they need to continue raising rates. And if they don't, we're going to have another bout of inflation like we did in the 70s. It's like we were supposed to have resolved all these issues and we're just right back to where we were. Right? One more thing, last thing. I think that student loan payments are a significant factor in all of this. There are a lot, like student loan payments is like 7% of the economy apparently. Okay, so like that's a lot of money that has been redirected into discretionary spending that's going to come out, and that's going to hurt the economy big time. Well, what time is it? 8:10? Oh, that was a long first 30-40 minutes on the S&P 500, wasn't it? I guess we need to talk about wokeness again. That'll make the time go by more quickly. What? The target madness. Hey, you know, I haven't checked that in a while. We should come out and look at some stocks, shall we? Let's look at some stocks. Trading view. I'll try and sit up straight in my chair here instead of slouching like a sloppy person. Well, it looks like there's a reasonable amount of intraday volatility, but let's go to a daily chart here. Oh man. Dude, that is ugly. When I first looked at this, because people were like saying, I think I would remember it was right here when this started being a thing, and there was some influencers that were like, it's not really down, like they were up really big the day before, so it's no big deal. Dude, that right there, that is ugly. That is an ugly trend, man. That is an ugly trend. And like, just from like a technical, not that technical analysis tells you anything anyways, but like all of the technical analysts are going to be looking at that saying like, look, here's your line and we broke the line, so we should come down to this next line, right? That is a significant break, but I would say this whole thing right here, you kind of have to discount because it was like COVID, right? So, but yeah, the company is being affected by it, significantly affected by it. How long? The real question here is, how long does this go on, right? Because that's the key thing is some of these corporations will say like, oh yeah, you know, our earnings were hurt for a quarter and then it was fine, you know, especially if Target ends up back up at 260 next year or something like that. I don't think that's going to happen. I'm going to bet you that they have a difficult time getting back above 200, let's say. You want to look at the other ones? Bud Light like really got hammered, right? Oh yeah. Bud Light is not at its lows though, so that one is kind of on this one. The stock does not appear to have been hurt as badly as like all of the data and sales and stuff that we've been getting. Really, you've started accumulating, Bud. Well, okay, have fun with that one. My rule is never buy a stock when it is the primary headline. like Bud is like, if I'm gonna buy it, it's gonna be like 6 months from now when like everybody forgot that even happened, you know. What is KSS? Oh, Kohl's. I'm not too familiar with the Kohl's situation. My wife used to love shopping at Kohl's. I haven't heard too much about that. What did they do? What did they do? News. Because they have Pride clothes? Your cheap dividends? I don't know, man. Like, are you enjoying the dividends in AT&T, for instance? I know it's not like you have a bad argument, but it just hasn't been working so well in AT&T. Because that's one that we've both been looking at and like, oh, that looks like awfully attractive, right? But the stock continues to be dismal. Now, one of the things that we should keep in mind is that the markets have a lot of markets have been struggling here lately, right? AT&T has kind of been falling with all of them as a quote unquote woke company, right? But that's because the money's going into different places, right? It's a very different chart when you look at AMD, for instance, or look at Intel, INTC, Intel. Even Intel has been benefiting. Oh wow, is that really, like, when I was looking at them at 27, I was like, I don't know if that's that big of an increase for Intel though. I'm having a hard time like wanting to commit a lot of money to this market though, is the thing. Maybe it's because I really do believe that we're going to have a recession in the second half of the year. Is that what's keeping me from? Because that, I think, would be a bad, well, that could be a bad reason to be. Oh, hey, like we broke a new low there as we were looking at that. You see that? It wasn't like that huge of a change in volume either. Just kind of did it. There's some other ones. What are the other ones to look at? Oh, we're gonna look at bank. Like, let's just look at Goldman. And they've just kind of been sideways, so that's okay. That's okay. You get 5 shares every. But how many shares do you have? I don't even remember what I was gonna say. But yeah, I was gonna go and read this. This guy says the Fed will treat this as hawkish, the bulls will cheer this as soft or no landing, and the bears will find enough to say the potential for a recession is still real. Risk assets could power through this data, which would be a positive event, and I would like to see good news being good news, even if it increases the probability of a hike. I think this guy is probably spot on. That's the way that people are going to read it. It was a pretty decent bid there too. So how much did the yield increase here? 6.5. That's not bad. I could have taken that. Could have taken that. I could have taken that, although I don't have a whole lot of flow support for it, right? Do you sell the 18? Well, I think what he's saying is that he immediately invests the dividends back into the stock and just buy more stock. You haven't seen a Kohl's in forever. It makes me want to go over there now. Oh, I know what I wanted to go into. Oh, 179 shares. So wait, that's people in your fractional shares. Oh, you have a decent amount in that. Like 2,700 bucks. I'm wondering that there should be an anti-woke index. Maybe we should be the ones that make it. It's not even like an anti-woke index. Like you could make a fund that is like, we're going to go long non-woke companies and we're going to go short woke companies and trade it like that. I bet you that, yeah, at least in the short term, that would probably make money. But I think that there would be a lot of problems with a fund that's that politically driven. You know, you would start making big mistakes. But rather, when I say we need to make an anti-woke fund, we need to make an index fund that competes with BlackRock and all of these others, right? But does not try to influence the companies. I feel that index funds should consult companies, but I don't think that index funds should coerce companies to behave a certain way. I think that the people that are best suited to be able to make strategic decisions for a company are individual investors that have more at stake. I think that the index funds are not as invested as they think they are, essentially. Well, you invest for income. Well, yeah, but if you're losing your shares and you, I don't know. Going back to the T chart, how big of a decline was it? From 20 to 15, that's like a 25% decline in just the past month, man. Why is AT&T dropped so hard this month? That is a little weird, isn't it? I don't know. There's been a lot of companies that have just been doing weird things. Like the whole Time Warner merge thing. That one makes zero sense. Like, they rebranded HBO Max to just the Max. Like, the HBO brand is like one of the best brands out there. Why would you ditch it? What the hell are they doing over there? I'm not quite sure why AT&T has been hit so bad. Well, I guess it's been since their earnings, but still. Yeah, they're probably not going anywhere. The question is just, oh, okay. Oh, wait, I don't have the... It's not set correctly anymore, so I don't know what day Warren... I should have put the date in there. Warren Buffett bought somewhere. Warren Buffett is down like 50% on that. Man, there is, look at that iceberging on the offer, man. They are definitely going to fill that big guy at 02. And we're at 7.5 now. So now that I've missed out on $25, I'm thinking I should have gotten involved. I guess we do have very different goals though, because if I'm buying individual stocks, I want appreciation. Because if I wanted the passive income, I would just be getting into like indexes and stuff like that. Let's see here. Are there index funds that pay dividends? Yeah. Index funds pay dividends because regulators require them to do so in most cases. Yeah, I haven't touched my portfolio much in a while, actually. You know, I'd kind of been eyeing Intel as a tech. Like the thing is I got to a point where, which by the way, we have to pull up here, Sumo. You see Sumo is still like just going nowhere, right? No, that's not right. That's Apple. I'm like, that is not a chart of Sumo Logic. It's because it's been delisted now. So yeah, the Sumo Logic one went away. Rare Earth Resources is just like dead. Look at this thing, man. This is just like a freaking joke. Can you believe? Can you believe that it was doing that well in 2021 and that it just turned into such a complete effing disaster? I'm a little mad at management. This is the issue that I'm running. I want to do like small caps, things that aren't really well known and stuff. And what's the issue that you run into when you're doing those sorts of things? Management makes dumb decisions. They get all this money and the investors get hosed. I mean, I'm not hosed. I'm still up on this one, but gosh. Oops, I need to yeah, my individual account hasn't really been going much of anywhere. In other words, hasn't participated very much in this rally because Sumo Logic went under or got bought out or whatever. And so I didn't invest back into a tech. If I had invested back into Intel, then maybe I would be back up at these highs, but and now I'm sitting here looking at this, like especially, oops, man, Nvidia. Man. I mean, like, look, the other day it had like a pretty big comeback, but like, or you know, pullback, but like it's still up there, man. Do you really buy Nvidia or does it fill the gap? I think most people would be leaning towards it fills the gap, right? If they send the 10 larger shares to the floor, then all dividend payments and share buybacks will stop. What do you mean by that? Anyways, I think that if I think that having an index fund that did not try to enforce its ideology on companies would be something that people would be interested in, and you could slowly get your fund added to more and more 401k plans. Because the animosity towards BlackRock is just rising. I can just see it freaking everywhere, man. Like, people on the right don't like them, people on the left don't like them. They were getting targeted over in France. Like, it kind of seems like there's an opportunity there. Wow. See, this is like, okay. ETF newcomer Strive Asset Management, which led the backlash against socially responsible investing with a fund that explicitly opposed environmental, social, and governance criteria, is taking a gentler tone as it files to issue more funds. The 4 funds in the latest prospectus cover traditional segments of the U.S. growth market, growth value, small caps, and dividend-paying equities. The firm launched the Strive U.S. Energy ETF, or DRIL, on August 9th and quickly accumulated roughly $300 million in assets. That sounds like that's a business I should be in, folks. How do I start my own index fund? Biggest hits I've been taking come from the crude pullback. Oh yeah, that's gotta hurt, dude. The issue I have, and when I say like I have, like, I mean, this is a problem with me, is that I have not done enough research into, you know, what would be an actual edge in a long run from a valuation perspective on an individual stock, right? So everything that I do is about, you know, something, and the shorter term time frame that you're talking about, the greater your ability is to actually quote unquote know something. You know what I mean? So when I'm going out and looking at stocks, I often feel like decision paralysis. Like I would like to put some money in, but I don't know when or where or any of that, right? And I don't want to just do index funds. I want to get better at that thing, but I'm not quite sure where I need to go or what I need to be looking at in order to do that. Starting my own index fund, that's really interesting to me, because that's the stuff that I'm interested in, is like optimal execution and all of that sort of stuff. Heck yeah, let's go for it. Let's go for it. How do I start my own? How do I go about making my own? I mean, because I could certainly like register a company and say, I'm an index fund now, give me your money. But if we were going to be successful at it, surely there's a lot more to it, right? As much as you hate technical analysis, the basic RSI in a weekly or monthly time frame is perfect. Well, no. So, like, if we go and backtest an RSI on a daily basis, right, what you're going to find is that the RSI will enhance your profits in the long run only because it increases the amount of risk that you're taking on. And so when you're talking about individual stocks, it's actually quite dangerous to be trying to buy things because it's below 30. Especially like small caps. Well, no, like, so if, for instance, I knew that this was a solid company that is likely to outperform in the future, etc., 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 like everything else that I wanted to know made me want to buy it, and it was below 30 on an RSI, then sure. But going out there and saying, creating a stock screener, show me stocks that are below 30 on the RSI, and I pick one of those. Don't do that. No. Well, that's what you mean. Oh, okay. But then the issue with that one is that these are not below. Well, okay, wait. Actually, AT&T may be that way. Actually, let's go look at AT&T. RSI. Relative strength index, and we want to make sure that it's a 14-day RSI. Okay. Oh wait, it actually is. It actually is below 30. Maybe you could buy AT&T, but I'm not sure that I'm on the I really want to buy AT&T bandwagon anymore. Seems to me that there is something fundamentally broken with this stock. I don't know what the deal is, what is going on with this thing, but there's something wrong with this company, man. Because they should not be struggling that much in this environment. They just shouldn't be. Even on a weekly basis, it's oversold on the RSI. It is not oversold on a monthly, but it's getting there close. You're at like a key support level in AT&T. I don't know. It doesn't really matter. So for me, it doesn't matter because what do I need in my portfolio right now? I need tech. So then it comes down to like, what's a good tech to get right now? I don't know. Let's do some shopping, shall we? Let's do some shopping. Products, screeners. Ooh, they have stock 2.0 screener, huh? Okay. So we want electronic technology, essentially, right? Health technology, mature technology services. We want tech. Communications. We can do communications too. Apply. Okay. RSI 1 day below 30. Apparently it's the entire telecommunications industry. It's not just AT&T. Does it have in here PEG? I want price earnings growth. Search PEG. Rise to growth. Well, we'll add revenue growth. Volume change. Let's just try that. Who has the best out of that? Who has the best revenue growth? Their RSIs are below 30, but they have the best price earnings growth. Oh, these are all companies I've never freaking heard of before. It looks like probably medical Technologies. PagerDuty Incorporated is a company? Nuh-uh. Nuh-uh. Really? I don't know. Is PagerDuty a great stock though? Or would that be a good business? Oh, I don't know. Oh, wow. That doesn't look too good for them, does it? Well, I'm gonna add that to my list. I'm gonna add that to my list, man. That's I don't know if that one. So what PagerDuty does is you can basically go in and like, you know, create different schedules and applications and stuff, and then say who is on call, and if there's an issue, who gets the message right now and stuff like that, right? That's what PagerDuty is. I'm really surprised that is a stock. Let's see here. One that I have on my list here, Alto Networks, Pan W. Ooh. Well. That's up over 10% on the year. Well, way more than that, in fact. So I had that one written down a long time ago. Oh, I also still have a BWXT. That's not a tech, but that's one that I kind of been watching. Ew. Well, that's interesting. It's not too bad from here to here, though. Because Amazon announced they're exploring a mobile phone service. Oh, wait. Didn't they deny that though? Let's see here. Amazon. Okay, so here's the Bloomberg story on it. Let's go into more detail. Amazon has been talking with wireless carriers about offering low-cost or possibly free nationwide mobile phone service to Prime subscribers, according to people familiar with the situation. The company is negotiating with Verizon, T-Mobile, and Dish Network to get the lowest possible wholesale price. VZ. So why would Verizon be down today? Or wait, maybe it's because it doesn't show me the candle until the day is. No. Let's do 5 minutes. Okay, so Verizon, T-Mobile. So they're going to do a deal with one of these companies and they're all selling off because of it? That doesn't make sense. Maybe we should buy one of them. Maybe we should buy Verizon. Because like, look, here, maybe. You know what? I think I might do it. Because T-Mobile is shit, dude. No, who? Do you know anybody that has T-Mobile service and really likes it? Nah, you buy T-Mobile because it's like the cheapest one. Nobody likes T-Mobile. Verizon, it's Verizon or AT&T. So if I am Amazon, I would much rather have Verizon, right? Oh, the talks have been going on for 6 to 8 weeks and have also included AT&T at times, but the plan may take several more months to launch and could be scrapped, one person said. Dish shares jumped 14% Friday in New York since a deal with the retail giant could help the struggling satellite TV company as it transitions to become a national wireless carrier. Meanwhile, T-Mobile fell 8.4%, AT&T dropped 5%, and Verizon slid 3.5%. The big three national carriers could see their own subscribers flee to a cheaper option at Amazon. Wait. So, if I was Verizon, why would I make a deal with Amazon that eats my own subscribers and basically gives me less from them? I wouldn't do that, right? I would just negotiate something where they pay me the same as if they were doing it through me directly, but they get it as a prime perk, right? Or, well, okay, maybe as an infrastructure deal. But if it was like an infrastructure deal, like I've got to be making more from Amazon than I'm going to be losing from subscribers moving over. I don't know if the drop really makes sense unless the Verizon and T-Mobile executives were being stupid and were really like making a dumb deal with Amazon. But all of that kind of makes me think that the deal's not going to happen. Nah, I don't think I can do this one. I don't know if I can do this one, guys. Let's see here. The carriers aren't really in a position to say no to Amazon, having poured billions of dollars into super fast, high capacity 5G networks. The mobile operators have little to show for the effort and are eager to find new applications and sales outlets that can generate some return on the investment. Gotcha. In other words, there is a fundamental problem with these businesses, right? They invested a ton of money into them and they aren't making more money. And this is a problem with a lot of tech companies, right? Is that so this is a problem with chip makers, for instance. The amount that you have to invest into the next generation of chips is insane. Like, if you want to come in and you want to move from 7 nanometers to 6 nanometers, you have to buy like completely new equipment. And so what ends up happening is you take almost all of the profits that you made from the last generations of CPU and put them into the new generation of CPU. And if that new generation doesn't yield for you, it's like, it's awful, right? And so it looks like the same problem is happening in the telecommunications industry. They have to invest a ton of money into the next generation of infrastructure, but then the next generation of infrastructure doesn't actually change the amount of revenue that they get. Everybody already has a cell phone plan and they've already reached saturation. Hence, there's a fundamental, and that's why the whole sector is struggling, is there's a fundamental valuation problem with these businesses, right? But that does mean, by the way, that if I was gonna buy a telecommunications company, it's probably too late, but if I was gonna buy one, I think I would want to be in Dish Network, because they're the one that has the most future revenue potential. Jeez, look at that. Look at that move. Wait, let's come back out onto a daily chart now. Oh my. That is a very, very ugly chart. ES came back with a vengeance, didn't it? They're still not to 4278 though. So the place we saw at 4268, a level break setup. That was one that you might have been able to say you can take, but it wasn't enough of a trend yet to really be confident on that one. And I don't know if it works as well in ES as it does in, say, the treasuries. But then we moved all the way down to 4250. So, like, from a risk reward perspective, if we're going to say our stop was at 42.58, you probably got stopped out, right? But they came up really nicely, didn't they? Dude, this Dish Network right here. Okay, if you want to play the game of I'm looking for something that's really down and I want it to be in the telecommunications industry and stuff, I think you go for Dish. I don't think I could buy something with a chart like that though. I want to see something. I want to see something that is on a steady uptrend and is pulled back, I guess. I don't know. It just comes back to, I don't know if I really have enough edge on a long-term perspective on picking stocks. I need to work on that. I'm not quite sure where I need to research to develop that more. They also want to be cloud-based. So, okay, I don't know what that makes sense, but whatever. I'm just going to minimize this. Oh yeah, I forgot about this tab. This was the anti-woke ETF. Strive Growth ETF, Value ETF, Strive 2000. Let's see if Strive Asset Management has a website. Are they trying to do what I'm talking about? Or are they more like a fund? Shareholder capitalism has outperformed stakeholder capitalism by over 3% annually for the past 35 years. Despite this fact, asset managers have shifted away from prioritizing shareholders and used their clients' capital to advance other stakeholders' interests. We view this as a major fiduciary breach. Our sole obligation is to the financial interests of our clients. We unapologetically prioritize shareholders over stakeholders. Sounds like they are doing what I'm talking about. Maybe an unwavering mandate that the purpose of a for-profit corporation is to maximize long-run value to investors. I don't agree with that, actually, to be honest with you. You still have to you still have an obligation to the public overall, right? And there are some situations where the correct thing to do is to take less profit, right? But my point is, I do not believe it is the place of the index funds to tell a company how it should be doing that. I think that the index funds should be entirely passive, that they should not have any effect on the governance of the company whatsoever, that only individual shareholders should. Okay. They do have 401k programs. Oh, okay, here we go. The Strive 500 ETF is a passively managed exchange-traded fund that seeks broad market exposure to 500 of the largest U.S. publicly traded stocks. I'm Through corporate governance practices, including voting proxy shares and proactively engaging with management teams and board, Stripe aims to unlock value across all corporations in Stripe's portfolio by mandating companies to focus on excellence. So basically what they're saying is they're doing the exact same thing as BlackRock, except for that they're pushing a more conservative agenda. So they're not actually doing what I think they should be doing. Do you think that that would work? Do you think that my idea would work? After reading this, after seeing this Strive thing, I'm a little skeptical now of the idea, because if I'm a person that's concerned about that sort of a thing, why would I invest in the fund that says that we're going to be hands off versus the fund that says we're going to encourage the companies to do whatever it is that makes you the most money? Right? In order to get what I want, they would have to pass a law to say that passively managed that managed funds don't get shares, don't vote shares. They can consult with the companies and things like that, but they don't get voting shares. Yeah, see, all they're trying to say is that, like, that DEI underperforms, so we're going to encourage people not to do that. Well, okay, they're not wrong, but at that point, you shouldn't be an index fund. Okay, so there was another story I pulled up that we can read here. An AI-enabled drone turned on and killed its human operator during a simulated U.S. Air Force test so that it could complete its mission, a U.S. Air Force colonel reportedly told a conference in London. The simulated incident was recounted by Colonel Tucker Hamilton, USAF's Chief of AI Test and Operations, during his presentation at the Futures Combat Aerospace Space Capability Summit in London. The conference was organized by the Royal Aeronautical Society, which shared the insights from Hamilton's talk in a blog post. No actual people were harmed in the simulated test, which involved the AI-controlled drone destroying simulated targets to get points as part of its mission, revealed Hamilton, who addressed the benefits and risks associated with more autonomous weapon systems. The AI-enabled drone was assigned a suppression of enemy air defenses mission. Air defenses mission. Am I having a stroke? Good grief. No, I'm okay, guys. To identify and destroy surface-to-air missile sites, with the ultimate decision left to a human operator, Hamilton reportedly told the conference. However, the AI, having been trained to prioritize SAM destruction, developed a surprising response when faced with human interference in achieving its higher mission. We were training in a simulation to identify and target a SAM threat, and then the operator would say, yes, kill that threat. The system started realizing that while they did identify the threat, at times the human operator would tell it not to kill that threat. But it got its points by killing that threat. So what did it do? It killed the operator. It killed the operator because that person was keeping it from accomplishing its objective. He added, we trained the system, hey, don't kill the operator, that's bad, you're going to lose points if you do that. So what does it start doing? It starts destroying the communication power that the operator used to communicate with the drone to stop it from killing the target. Oh, wow. This unsettling example, Hamilton said, emphasizes the need to address ethics in the context of artificial intelligence, machine learning, and autonomy. You can't have a conversation about artificial intelligence, machine learning, autonomy if you're not going to talk about ethics and AI. Jeez. This reminds me of the story of the guy who asked ChatGPT if saying the N-word was acceptable if it saved humanity from a nuclear annihilation, and it said no. Have you seen that skit where a guy he can't use a white guy, so he can't use the N-word, so he finds a black man to follow him around, and he pays the black man to use the N-word for him? A pretty funny one. Well, I find it interesting that they actually went in and trained it. I mean, they didn't come in and say you can't kill the operator necessarily, but they trained it not to kill the operator, and then it killed the communications. In other words, you have to reward it for doing what the human says too. That's such a crazy story, though. Well, we came back a little bit. I still could have made another $10 out of this. It's not entirely clear to me what drove that downside action, other than the Japanese yen pushing down and the dollar pushing up. But I have no clue what's happening at this next meeting. Like, to be 2 weeks out and I'm still a little vague about what's going to happen is a little weird. So, and especially since we get that huge CPI data the day before, like, oh my gosh. That means that CPI number is going to be like a huge mover. Well, I mean, maybe it comes in line and doesn't do anything, but it could drive a lot of volume. The volume next week is going to be really important to watch, and it's going to be really interesting to watch. Well, I don't think I'm going to buy any stocks today, but have a couple of things to think about. I'll see you guys tomorrow, or not tomorrow, Monday. In the meantime, stay excellent.